I'm not buying more silver right now. And that statement alone probably sounds strange, especially at a time when headlines are full of supply shortages, geopolitical tension, central bank accumulation, and growing distrust in fiat currencies. Silver, after all, sits at the intersection of money and industry, and historically it performs best when uncertainty rises. But real investing isn't about reacting to narratives. It's about understanding positioning, timing, and risk. The truth is, I already own silver, and that matters. Decisions change depending on whether you're building a position, protecting one, or chasing momentum. Right now, silver is no longer ignored. It's being talked about everywhere, by retail investors, by commentators, and by short-term traders who only show up once prices start moving. That shift in attention is important, because markets rarely reward the crowd at the moment when confidence feels highest. Silver has moved from being quietly undervalued to loudly discussed, and that transition often marks a pause, not a breakout. Prices have already reflected a large portion of the known risks: inflation persistence, supply constraints, and industrial demand growth. When too many participants expect the same outcome at the same time, even a strong long-term thesis can struggle in the short term. I'm not bearish on silver's future, but I am cautious about adding at current levels without a margin of safety. Markets move in cycles, and patience is part of discipline. There's also an emotional side to this decision that doesn't get discussed enough. Buying more simply because prices are rising is not conviction, it's momentum chasing. Conviction comes from buying when assets are ignored, doubted, or uncomfortable to hold. Right now, silver feels crowded, not neglected. That doesn't mean it's over, and it certainly doesn't mean it's a bad asset. It simply means the risk-reward balance has shifted. And when that balance changes, sometimes the smartest move isn't to act, but to wait, observe, and protect capital until the next opportunity presents itself. Another reason I'm not buying more silver right now has to do with structure, not headlines. Markets don't move only on fundamentals. They move on liquidity, positioning, and expectations. When you look beneath the surface of silver's recent strength, you start to see signs that enthusiasm may be running ahead of reality. Futures positioning has become increasingly one-sided, with speculative money leaning heavily in one direction. That doesn't mean prices must fall immediately, but it does mean volatility risk rises sharply. Silver has a long history of sharp pullbacks even within strong bull cycles, and those pullbacks usually arrive when confidence is highest and caution feels unnecessary. I've learned that ignoring that pattern is costly. Another factor is the broader macro environment. Interest rates, even if they eventually decline, are still restrictive compared to the last decade. That matters because silver is not just a monetary metal. It's also sensitive to economic growth expectations. If growth slows faster than expected, industrial demand optimism can fade quickly, putting pressure on prices even while long-term supply constraints remain intact. This creates a disconnect where the story stays bullish, but the price struggles or corrects. That's a dangerous zone for new buying. There's also the issue of opportunity cost. Capital is finite. Every dollar deployed into silver today is a dollar that cannot be used if prices retrace or if another asset becomes mispriced. Waiting is not inactivity. It's a strategic choice. I'd rather miss the last few dollars of upside than absorb unnecessary downside risk. This is especially true after a strong move, when markets often need time to digest gains. Consolidation is healthy, but it's rarely comfortable, and it can test conviction more than a simple dip. Finally, there's the psychological trap of confirmation bias. When silver is rising, every data point gets interpreted as bullish, while risks are dismissed as noise. That's usually when discipline matters most. My long-term view on silver hasn't changed, but my short-term behavior has. I don't need to constantly add to feel secure in my position. Sometimes restraint is the most underrated investment skill. For me, paragraph 2 of this story is about respecting cycles, managing risk, and understanding that good assets can still be bad buys at the wrong moment. There's also a deeper, less discussed reason behind my decision, and it has nothing to do with silver itself. It has to do with behavior. Financial markets are driven by human psychology long before they're driven by math. Right now, silver has become a symbol. It represents protection, rebellion against fiat currency, and a hedge against a system many people no longer trust. While those ideas are valid, symbols tend to attract emotion, and emotion tends to distort timing. When an asset becomes a statement rather than a calculation, it often trades ahead of its fundamentals. I've seen this pattern repeat across cycles. The asset is ignored for years. Then suddenly it becomes obvious, and that's when late capital rushes in. That doesn't end the trend, but it often pauses it. What concerns me is not that people believe in silver. It's how confidently they believe the move must continue in a straight line. Markets never move that way. They test patience. They shake out weak hands. They create moments of doubt precisely when conviction feels strongest. I prefer to enter when uncertainty is high, not when confidence is widespread. Another element here is narrative fatigue. When the same bullish arguments are repeated daily, supply shortages, industrial demand, monetary debasement, they lose their power to move prices higher in the short term. For markets to advance, they need new information, not recycled conviction. At the same time, risks that are currently ignored, policy shifts, liquidity tightening, or sudden changes in risk appetite, don't need to be large to trigger a pullback. Silver doesn't need bad news to fall. It only needs expectations to cool. This is why I'm focused more on preserving clarity than increasing exposure. Owning silver already gives me alignment with the long-term thesis. Adding more right now would be about emotion, not strategy. And when emotion starts guiding decisions, the margin for error disappears. Stepping back allows me to stay objective, to watch how price reacts when optimism meets resistance, and to be ready if the market offers a better entry. Discipline isn't about being early or late, it's about being intentional. Another important piece of this decision is understanding where silver fits within a broader portfolio, not viewing it in isolation. Silver is a powerful asset, but it's also one of the most volatile metals in the market. That volatility cuts both ways. It can amplify gains, but it can also magnify drawdowns, especially when liquidity tightens or when broader markets move into a risk-off phase. Right now, many investors are treating silver as a certainty rather than a variable, and that mindset creates imbalance. I don't want my portfolio outcomes to depend on one asset continuing to behave perfectly. Diversification isn't about owning many things. It's about managing correlation and exposure across different scenarios. At this stage, my silver allocation already fulfills its role as a hedge against monetary instability and systemic risk. Increasing it further would shift my portfolio from balanced to concentrated. That's a subtle but important distinction. There's also the reality that silver tends to move in bursts, not trends. Long periods of sideways action often follow sharp advances, and those periods can last longer than most people expect. During those phases, conviction is tested not by loss, but by stagnation. Capital tied up in a non-performing asset still carries a cost, even if prices don't collapse. I'd rather allow silver to prove itself through consolidation than force additional capital into it prematurely. This approach also keeps optionality open. If prices correct meaningfully, I can act with confidence instead of regret. If prices continue higher without a pullback, I still participate through existing exposure. That asymmetry matters. Risk management isn't about predicting the future. It's about preparing for multiple outcomes. By not buying more silver right now, I'm not stepping away from the thesis. I'm reinforcing the structure around it. Sometimes the strongest position is the one that allows you to stay flexible when the market inevitably changes its tone. Ultimately, this decision comes down to discipline and time horizon. I'm not trying to predict the exact top or bottom in silver, and I'm certainly not calling the end of the story. Silver remains one of the most strategically important assets in a world defined by debt expansion, geopolitical fragmentation, and long-term supply constraints. None of that has changed. What has changed is the urgency to act. Markets reward patience far more often than they reward constant activity. Yet patience is the hardest skill to master because it feels like doing nothing. In reality, it's an active choice to wait for clarity rather than chase momentum. I'm comfortable sitting with an existing position and allowing the market to reveal its next move. If silver consolidates and sentiment cools, opportunities will return. If it corrects sharply, discipline will matter more than conviction. And if it continues higher without pause, participation still exists through what's already owned. This approach removes pressure, emotion, and the need to be right in the short term. Too many investors confuse long-term belief with short-term urgency, and that confusion often leads to overexposure at exactly the wrong time. For me, not buying more silver right now is about respecting cycles, protecting capital, and staying aligned with strategy rather than noise. It's about understanding that the best decisions often feel uncomfortable because they go against the emotional pull of the moment. Silver's role in my portfolio is intact, my conviction is unchanged, and my outlook remains forward-looking. I'm simply allowing time and structure to do their work. In markets, restraint is not weakness, it's strength.